Hey guys, welcome to the official Market Makers University Forex YouTube channel. I'm going to be using this platform to give you guys an opportunity to learn how we consistently extract money from the Forex markets as professional traders. Now, I do want to set some ground rules here because this is not your traditional Forex YouTube channel. We do things a little bit differently around here. So if you clicked on this link expecting to make $1 million within your first year of Googling Forex, then this channel isn't for you. Or if you're looking to make some quick and easy money here and there and you're trying to just do this as like a side hustle, side hobby, and not really going to take this seriously, then this channel isn't for you. We take this industry very seriously and we essentially run our trading as if we're running like a seven-figure business. Every single move that we make, it's methodical, it's thought out, it's predictable. We get predictable results and consistent results because we treat this industry seriously. Now, I've been trading for quite a long time now, and while this industry is very attractive to get into, 90% of retail Forex traders end up losing 90% of their capital within 90 days of getting started in this industry. Why is this? It's because all the information out there, it's just beginner traders teaching other beginner traders. Everyone's running around teaching misinformation. Your friend learns how to trade Forex. They try to get you to start trading Forex. You guys are both trading Forex. You guys are both new. And what ends up happening? You end up losing your money. And guess what? Forex itself is a zero-sum game. What does this mean? This means for every winner, there must also be a loser. So for example, if you and your friend lost $200 on a Forex trade, guess what? Someone who's smarter than you, someone who's been doing this longer than you, someone who's been professionally coached and trained how to trade this market properly has taken that money directly from you in that trade. So if you're treating this industry as if you are just looking to make some quick money here and there, then you're not going to last very long in this industry. However, I do have some good news for you. Whether you're a beginner, intermediate, or advanced trader, I'm going to be using this channel to give you guys the lessons that I've learned throughout my Forex career. So this channel is for you if you're looking to take Forex full-time eventually in the next 2-3 years, and if you're looking to eventually replace your full-time income. This channel is for you if you're looking to create predictable growth on your Forex account, and this channel is for you if you're looking to learn how to trade Forex the right way. So if this is the very first Forex video that you've opened up after you got on YouTube, good news, you're in the right place. So you're going to want to be subscribed to this YouTube channel so you can get updates on whenever I release a new video. But I want to use this video to go over the basic foundations of this industry so you understand the inner workings of this market, so you can understand exactly how the money is made and how we're able to make money through Forex. So let's go ahead and get right into it. So the easiest way for me to kind of illustrate how this industry works is to give you a scenario to help you understand that if you've already visited another country before, that you've probably already participated in a Forex trade before. Now, let's assume that you live in the US and you want to take a trip to Canada, right? The first thing you would do is you would try to figure out what the exchange rate is from US dollars to Canadian dollars. So you would just go to Google and you would search $1 US gives you how many Canadian dollars. And on Google, you would hit enter and they would give you the answer. $1 United States dollar gives you $1.27 in terms of Canadian dollars. And you'll notice there's a little chart on the right-hand side, which kind of gives you the historical data of what the exchange rate was in the past. And you'll be able to click on various different time frames to get like a zoomed out view to see what the exchange rate was. Now, this is as far as the average person would kind of get in their research of the exchange rate whenever they're wanting to visit another country. But in terms of Forex traders, we go one step deeper. Now, I want you to notice that the answer that Google gives you that the US dollar is, it's $1.27. It goes to the second decimal place. Now, Forex traders, we go a little bit deeper and we look at the exact conversion rate all the way up to the fifth decimal place. So we would look at a chart something like this. This right here is called a Japanese candlestick chart. Now, while Google told us the exchange rate was $1.27, the exact conversion rate would be 1.26855, which rounds up to $1.27. Now, I want you to imagine this scenario. I want you to imagine that you're a multi-millionaire living in the US, and let's say that you wanted to take a trip to Canada on, let's say, March 19th of 2020 before the whole world fell apart. Now, you wanted to take a trip, but remember, you're a multi-millionaire, so you wanted to take $100,000 cash in a briefcase to Canada. So you pull up to the airport, and before you hop on your flight, you go to the little foreign exchange window at the airport, and you have your little briefcase full of $100,000, and you go to the teller and you say you want to exchange that money. So she looks at your briefcase, she opens it up, and she sees $100,000 cash. She gives you a weird look, and she calls her manager, and she ends up exchanging the money for you. But at that time, on March 19th of 2020, the exchange rate was $1.46. Or in other words, it was 1.46607. You exchanged your money, your $100,000, and she gave you the equivalent amount in terms of Canadian dollars. So how much Canadian dollars did she end up giving you? Well, that's very easy to figure out. You would simply take the amount of money that she gave, that you had, which was $100,000, and you would multiply by the exchange rate, which is 1.46607. So she gave you 146,000 Canadian dollars. Now, let's assume that you stayed in Canada for the rest of the year, and you ended up realizing that your credit card also works in Canada, so you didn't spend any of your $146,000. You just ended up using your credit card the whole time, but you still had your briefcase full of money tucked under your bed in Canada. And let's assume that you finally ended up getting bored of Canada because, it's cold in January now, so you ended up wanting to come back.
Several days later.
But now the exchange rate had dropped down to 1.26833, for example. So now you're back into the airport in Canada. You have your briefcase full of $146,000, and you go to the teller and you say, "Hey, I want to exchange these Canadian dollars back to US dollars because I want to go back home." So what does she do? You pretty much do the exact opposite of what you did to convert to Canadian dollars. So you would just divide the amount of Canadian dollars that you have by the new conversion rate, which is 1.26833. So remember, initially we had 100,000 US dollars that we converted. But as you can see here, 295 days later, once we convert the money back, we have $115,000. So essentially, just for visiting Canada for 295 days, we made a profit of $15,000 just because the exchange rate fluctuated. So that is the essence of the Forex market. We are essentially trading the fluctuation of the exchange rate of the Forex market. So you might be thinking, okay, cool, you can make $15,000 by exchanging $100,000 in 295 days, but that doesn't sound realistic to me. I don't have $100,000. And you'd be right. It's not realistic if you were trading Forex 30 years ago. However, because of the internet age that we live in, because of the current times that we're in right now, we're able to have these type of profits without having to put up $100,000. And this is why Forex is so attractive to so many people right now. So let me explain how you're able to make money off of the fluctuations of these exchange rates in the Forex market without having to put up $100,000 capital. So let's just say that you were quietly studying these markets for like 5-6 months, and you were working at your job and you wanted to save up like $10,000 to put into your Forex account. So you work at your job, you save up the $10,000, and now you have that money in your bank account, and now you finally want to start your Forex account. The first thing you would do is you would find a Forex broker to kind of put your money in to allow you to trade. What's the point of a Forex broker? What do? A Forex broker essentially allows you to do these exchanges, as we mentioned at the airport, without having to go to the actual airport. It allows you to enter these exchanges directly on your cell phone instantaneously without having to drive in your car and go to the airport. And the benefit of these brokers is they give us what's called leverage. This is the magic to Forex. This is what allows us, normal everyday people like you and I, to be able to make money in the Forex market without having to put up crazy amount of capital to enter these trades and still make some decent amount of money. So as you do your research to choose a broker, you'll notice that some brokers give you 1 to 20 leverage, 1 to 50 leverage, 1 to 100 leverage, 1 to 500 leverage, and even 1 to 1,000 leverage. Now, this leverage can be a good thing if you know what you're doing, and it can be a bad thing if you don't know what you're doing, right? They say with great power comes great responsibility. So as long as you use this leverage responsibly, this can be a very good thing for you, as long as you use it responsibly. So let's go back to that example of that $10,000 Forex account that you open up. And let's say you're willing to risk 2% of that $10,000 account. Meaning if you get the trade wrong, you're okay with losing $200. But because you chose a broker that gave you 1 to 500 leverage with that $200 that you're willing to put up into that trade, you put up that $200 as collateral, and the broker essentially allows you to play with $100,000 because they gave you that 500 leverage. So you're entering a $100,000 trade by only putting up the $200. Now, going back to the chart to kind of show you how you'll be able to use this to your advantage is, notice, first of all, I'm looking at what's called the daily chart. That's what this D stands for. This shows you each of these vertical bars, which are called Japanese candles. Each of these candles represents 1 day. I want you to look at the bottom, right? It's changing by 1 day each time. Now, let's go ahead and zoom in into a 1 hour time frame, for example. Now, what this shows is each of these bars is representing 1 hour worth of time. Again, look at the bottom. You'll notice that it's moving around by 1 hour. So let's just say, for example, you want to do the same exact trade, but you want to do it with your $200 that you put in, right? So let's assume that you enter your trade right here on January 5th, 2021 at 9 a.m. in the morning, okay? And the conversion rate of the $100,000 that you put up, that you entered on that trade, would have been at that conversion rate at 1.27737. The broker would have essentially exchanged that for you at the conversion rate, and you would have had $127,000 essentially traded in that trade. Now, let's say you wait for the price to fluctuate, and the price fluctuated a little bit, and you notice 4 hours later, the conversion rate now has dropped to 1.26639. And now you tell your broker to close the trade because you're satisfied with this amount of fluctuation in the exchange rate. Now, the broker essentially converts the funds back to US dollars, just like we did at the airport, but now we convert it at this exchange rate, 1.26639. And based off of that, you initially had your $100,000 trade, and based off the difference, you now made $867 in a time span of 4 hours. That's making around an $800 profit in 4 hours of time, simply because you were playing with a $100,000 trade, but you really only put up $200 capital. That's how people are able to make pretty substantial amount of money by only having to put up small amount of capital, which is why Forex is so attractive to so many people. Now, as long as you can kind of predict which direction the market is going to be going, you'll be able to essentially capitalize and profit off of these swings using a small amount of capital to enter your trades. So it's our job as traders to understand 3 things to allow us to enter profitable trades. We need to figure out 3 things. We need to understand, number 1, which direction that the fluctuation of the exchange rate might be going. And number 2, we need to understand when exactly we should enter a trade. And number 3, we need to understand when exactly we should exit a trade. Once we understand those 3 things, that's how we'll be able to become profitable traders. Now, how do we anticipate where the market is going? How do we anticipate these 3 things? We use what's called a combination of specific type of analysis. We use what's called fundamental analysis, and we use what's called technical analysis. Now, pretty much what fundamental analysis is, it's understanding what's going on in the economics of a country. This means what different news events are coming out, what different releases are coming out, what's happening in the overall economy. And you can notice what happened in 2020 from March, ever since the country was in lockdown. The US dollar kept dropping. It kept dropping. It kept dropping. The US dollar is dropping. Now, as long as you could have understood and figured what was going to happen to the exchange rate by understanding and noticing that the economy is not looking very well, you would have noticed that we could enter a trade going in the down direction and make money all the way down of this exchange rate, just like the example that I gave you, that we entered a trade here and then we exited the trade here, in terms of that when we went to Canada at the airport. Same exact scenario. So we need to understand the direction of the trend. How do we figure this out? We need to understand what's happening economically into a country. That's called fundamental analysis. Now, the second thing we combine is what's called technical analysis. We use what we see visually on the charts to anticipate where the market might go by looking at various clues on the actual chart to help us anticipate where the market might go. So we might draw some technical analysis here, and we might see that the price has a high probability of bouncing along certain areas and going specific ways. As long as we can combine technical analysis and fundamental analysis properly, we're able to determine exactly where the price might go with high probability to give us an edge in these markets. And because we're trading the fluctuation of the exchange rates, we can make a bet whether the exchange rate is going to go up and make money, or we can also make bets that the fluctuation is going to go down and still make money. That's the benefit of Forex. We don't have that psychological bias that the price is always going to go up. Because like in most stocks, the price is usually going to go up.
Stocks only go up.
Example, Apple, right? Or example, Amazon. When trading stocks, people have a psychological bias that the price is always going to go up. But whenever we're trading the Forex market, because we're exchanging the exchange rate between one currency and another, we don't have any psychological bias. So we're able to make a bet that the market is going to go up, which is called, in trader lingo, going long, or we can make a bet that the market is going to go down, which is called going short in trader lingo. In fact, half of my trades are going long, and then half of my trades are going short, because we just have to understand that which direction the market is going to go. We just need to make a bet that the market is going to go that direction, and if we're right, we make money. If we're wrong, we lose that small 2% or 1% of our account, or how much ever we're willing to risk for that specific trade. That's the benefit of Forex, and the fact that the market is open 24 hours a day for 5 days a week, it just allows so many people to start trading the markets whenever they get off of work or whenever they're off of school. So you're not restricted to a specific 9 to 5 schedule to trade. You can trade at any time of the day, which is why so many people are attracted to Forex. Now, this is just a basic foundational video regarding how the Forex market works. I'm going to be diving deeper, matter of fact, a lot deeper in the following videos. So it doesn't matter whether you're a beginner, intermediate, or advanced trader. There's going to be videos for you. Just make sure that you pay specific attention to exactly what I teach so you can actually learn it the correct way and put yourself in a position where you're on the right track, where you do not have any false expectations when it comes to this market. You can make a lot of money in Forex, but this is far from a get rich quick. This is more of a get rich slow, but get rich permanent. Once you learn this skill, once you master this skill, you then have it in your mind forever. You can trade wherever you are in the world, whenever you want in the world, with whomever that you want. You're not restricted to any specific locations, but the main thing is this is a industry that you have to focus in, because every time you enter a trade, there is always someone else on the other end of that trade that you're buying the currency from, that you're selling the currency to. So you have to make sure that you're smarter than the other person, so you can slowly start building your equity, so you can slowly start building your Forex account and grow your income in this industry. So take this industry very seriously, treat it like a business, be serious with it, and there's a lot of good things to come. And I'll be going into a lot more details on my future videos, so make sure that you hit the subscribe button, like the video if you want to see more videos like this, and I'll catch you guys in the next video. Take care, and I'll talk to you guys soon.